Yeah, I see. Thank you for this information because we see a lot of attention for African country during our job as a distributor in the UK of micro capital. So there are a lot of people that are looking for the future of these countries, and they are probably ready to consider this jurisdiction for further investments. Okay. What is the difference between microcredit in Central Asia, Africa, and Europe based on your experiences?
Well, I'd like to start with Central Asia because that's where my current strongest experience is. Previously, I've been involved a lot in Africa, but at the moment, our group is focusing on Central Asia, and so I would like to start with this. Central Asia is essentially 5 countries, all of them ending with Stan, and so all the Stan countries except for Pakistan are considered here, and these 5 countries have mixed regulatory environmental frameworks, differentiated regulatory environmental frameworks for microcredit. Kazakhstan, Kyrgyzstan, Tajikistan are well developed. In Tajikistan, for example, and that is worth mentioning, there is a regulation for microfinance institutions allowing them to also collect deposits from private individuals, like, as I mentioned, in Mozambique in Africa before. This is extremely important because it can allow MFIs to grow based also on local deposits. To a limited extent, they cannot collect deposits from companies, but from private individuals. But in particular, they can offer deposit services to their clients. This is given in Tajikistan. This was not given in Kyrgyzstan. And so in Kyrgyzstan, a lot of microfinance institutions a few years ago swapped their licenses against small full banking licenses, but nevertheless continued with their activities. So differentiated regulatory conditions, not so well developed in Turkmenistan, and quite well developed also in Uzbekistan. Now, looking at the economic conditions in these countries, strongly in the small business segment relying on agriculture, and the private segment strongly relying on remittances, and in the large corporate activities often strongly relying on mining and extractive industries. So, of course, this is not a clientele, mining and extractive industries, for microfinance. It's a big corporate finance, of course. But around these activities, also mining activities and larger trade activities, of course, there's a lot of small businesses flourishing, and they are again then clientele for microfinance. I would say the cultural context, as everywhere, is influenced by local customs and traditions. Trust and social capital play a significant role, although there's usually no group-based lending in formal terms. Nevertheless, social cohesion among in the villages and then within the families is strong, and so informal group lending approaches, whereby if one borrower has problems, somebody within the family or the community will be expected to step in, is prevalent. It's actually all types of institutions present there, both from international holdings like Finca or Access, but also we are present in 3 of the 5 countries with microfinance or leasing. Then there's also NGO-based programs which have grown into proper microfinance institution, and also some government-supported programs, especially what concerns female financial inclusion. So all in all, I would say this is a region where a future growth potential for microfinance is clearly given, although the developments are already quite good now. Now again, shifting to Africa with its diversity, I mean, it's a bit difficult to speak about Africa in one batch, because it's many countries, all of them are different sort of, and perhaps you can group it a little bit for what concerns the relevance and success of microfinance. as mentioned before, some countries like Kenya, Nigeria, Uganda, Mozambique, but even Democratic Republic of Congo have well-developed microfinance sectors, whereas others have not and lack comprehensive oversight. I've already mentioned that South Africa and Namibia, there's a tendency of microfinance to do consumer lending and payroll lending because SMEs are often served also by the regular banks. What, of course, always counts in Africa is the economic conditions and the political stability. From an economic perspective, in most countries, still a high level of informality with large segments of the entrepreneurial population being engaged in either small-scale farming, trading, or other informal businesses. And reaching them is basically the almost exclusive realm of microfinance. Banks don't reach these clientele. African banks, traditional commercial African banks, focus on either crediting larger enterprises or consumers, or, and that's really the biggest challenge, on buying just government bonds. The African banking sector, by average comparison, which is difficult to make across 50 countries, of course, is largely a lazy banking sector focusing on government lending, buying government bonds, and perhaps doing some lending to larger corporates. So here for Africa, microfinance is absolutely the key for bringing financial inclusion to small, informal entrepreneurs and entrepreneurial people. Success is being stronger or weaker depending on country context. Even more than in Central Asia, cultural norms such as extended family obligations and community support are still even more prevalent. And so in Africa, you do still see the real group lending, where a borrower group is the borrower, and even though only one or two members of the group are the users of the proceeds, but the whole borrower group feels responsible for servicing the loan. Given the wideness of the continent and the many countries, you see a lot of well-known institutions in some countries, like in Kenya or Nigeria, but you also see, for example, 5 companies of the Finca holding, Finca Microfinance Holding, being active in Africa, in DR Congo, in Malawi, in Tanzania, in Uganda, and Zambia. Then you see the so-called access banks, not the big Nigerian access bank, but the access holding Berlin-based microfinance banks in a few countries. Until some years ago, you also had the Microcredit banks in some African countries, but by now they have, Microcredit has stopped banking in Africa because they turned towards more the SME segment and left the microfinance segment. But the former institutions have been bought up by commercial banks there. So a differentiated picture in Africa. Now Europe, that's, I think, an interesting frontier, especially EU Europe. Of course, having a highly regulated financial sector, everything eventually under the same regulatory framework given by the Commission and the ECB or the national regulators. Nevertheless, the EU has specific frameworks and guidelines to support microcredit. This seems to be a bit odd at the first place, but indeed, I would personally say that after years of crisis, first COVID, then war, and other not so promising events, the number of people who might fall out of the classic banking sector, although they are entrepreneurial and might need microfinance to redevelop their businesses, should be growing. So I think that microfinance in Europe clearly is a growth sector.
Yeah,
it's more seen, I would say, it's not so much for poverty alleviation, but rather for social inclusion or social re-inclusion. If you look at people who had operated small businesses and then, due to many of the crises, lost their business, lost their banking track record, and now need a fresh start. Or it could be a tool to support specific target group like migrants who found settled in Europe and need to start up their businesses. Yeah, that's Europe.